seller notes, they're not dead. Franchises still in play. So all of these things are still SBA eligible. What are what are some pro tips that you have? You're 20-year veteran in the SBA space. What are some of the proactive things that buyers and sellers, I guess especially in my mind, what sellers can think about as they are like, "Oh, I might sell in the future, how these SBA, you know, rules affect me?" Because I think, sellers want to prep so that's the most sellable business possible. With the SBA rule changes in mind, are there any kind of pro tips you have, prepping towards, a sale and an acquisition?
Yeah, definitely. There's a well-prepared seller is going to get a higher value for their business. So, clean financials, number one. I mean, having a clean balance sheet and income statement, that's an absolute must, but you would be surprised at how many sellers we work with where their balance sheet doesn't balance, or their financials, they only update them quarterly, or sometimes even, they actually don't even update them till the end of the year when their CPA is asking them for all of their information to do their taxes. That's not going to work in an SBA transaction. We need financials that are current. The SBA says they need to be current within 120 days, but most lenders want to see them current within 60 days. So, at a bare minimum, your financials need to be current at 120 days, but for most lenders, you want to have them fairly current within the last 60 days. Another thing right now, and I was actually talking with several business brokers a couple of weeks ago, and they're seeing this same trend, which is a little disconcerting to me, is we're seeing that year-to-date numbers in 2025 in a lot of businesses are trending under where they were in 2024. So we're always going to do a look back. So if we're looking at first quarter 2025, we want to see how that compares to 2024. And if it is trending down, we need to know what's causing that. It doesn't mean that we can't lend money on that business, but it means we really need to understand what's going on in the company. 2024 may have just been a banner year for them that wasn't going to be achievable again.
Right.
And as long as we know that and know the mechanics that cause that, that's going to be fine. But what we don't want to see is, declining trends in the business, and then the business owner not have a great understanding of what's causing that in their financials. Um, Another big thing that I see is lots and lots of ad backs from the seller. They're running the business like a lifestyle business, and they're running so many different things through the company. Um, if they can get those cleaned up a year ahead of time, that would really be beneficial. But if it's an instance, which we see a lot, somebody's in bad health, they need to sell their company, they didn't have the luxury of working with a good advisor like yourself for several years to be able to kind of get the business ready to sell, we're happy to look and entertain those ad backs. We actually partner with GCF Valuations, and they'll do an ad back tracing for us because the bank doesn't have the bandwidth to go and validate that every ad back is legitimate, and we do have to do that. So the SBA program is a taxpayer funded program. Because of that, we're underwriting to the tax return. So if I cannot foot those ad backs back to the tax return, I cannot include them. So that's why the ad back tracing is so important. They'll go in and actually, look through the company's financials. They'll look through the bank accounts. They'll look through receipts. They will give us a paper trail that is provable to the SBA so that we can foot all of those ad backs back to the tax return. But that can take time as well. So I actually got a LOI on Friday from a client that was giving him 30 days due diligence period. It was a company that had a 3-page list of ad backs.
Oof.
That's just not going to give us enough time, unfortunately, to get through that amount of ad backs. So that's another thing that, I think sellers, if they could realize, if their business model is a little bit more complex and they do have a lot of ad backs, they're going to need to be comfortable knowing that the due diligence time period from the buyer's side is probably going to be longer than 30 days. And so just, giving a little grace there, realizing that It's not the fact that the person looking to buy the business isn't qualified and can't get financing. It's more of that to get the financing and hit that number. That's what I always go back to the sellers. I'm trying to hit that number for you so that you can maximize your enterprise
Right.
value and we can finance more. The other alternative is just to not include those add backs, and then what we can finance goes down. I always like to qualify that from the lender side. We are never here to tell the seller what his company is worth. We're here to tell you what we can finance on it. And if you're looking at a buyer that needs financing, you're going to need to take that into mind when setting the purchase price for the business, and who your qualified buyers are. If it is a business where we cannot leverage the company at 90% under the SBA guidelines, your buyer probably isn't somebody that's coming in with a minimum 10% down as